Hello everyone, welcome back to another Smart Money Sundays. Now, before I jump into this video, please do leave a like, subscribe, comment, do all that good stuff. Definitely does help me, keep this series going. But without further ado, let's just jump right into the video. Now, I'm going to first get started with the DXY as we always do, right? So as I mentioned last week, right, we've deviated the low of this range, okay, and now we're coming to target this liquidity at 1.06, okay. We're potentially even coming to fill in this region at 108, between 109. I think it's very likely that we eventually come up into this level here to come and fill in all this inefficiency before we see the next move in price. Either we reverse or we continue on higher, okay? Which we'll get into once we'll get there once we cross that bridge. But now let's go into where we've actually, what's been going on this past week. So if I go on the 12-hour, right, you would have seen, okay, we've basically just pushed, extended to the upside. I would have liked if price came back into 103, as I mentioned, but we didn't get that pullback. Usually when trends are strong like this, you won't get as many pullbacks, okay, which is why I'm being cautious coming into next week, because into the new week, we do have CPI data on Wednesday. We have retail sales and we have ECB interest rate news as well. So we do have a lot of red news coming in particular, Wednesday and Thursday is going to be big fundamental drivers. So we're going to see a lot of volume or volatility in the market as a whole, especially with USD majors and Euro pairs as well as we're going to see movement in crypto as a whole as well, I believe. So next week is going to be a very big week. So now we understand the fundamental drivers, okay, we can now dive a bit more in depth with technicals. So as you can see, what ended up happening, we didn't get the pullback would have liked, but price ended up coming down. Okay, let's go on the 1 hour actually, just to illustrate this a little better. So we are still targeting 106, right? That we have that draw, this liquidity that is now my next target. So which means I'll be looking for longs. Now, one of the reasons I'll be looking for longs is we had this sweep of liquidity, clean manipulation. Price has held these lows. Okay, that broke structure here. So, and it just retested that level. So, which means we're likely going to push up higher because this structure is broken now as well. So, what I'm anticipating is some sort of small retracement into 104. So, 105 basically, 104.9. Technically to 104.6. Okay, I'm going to anticipate a push into this level, all right, a retracement before we see that extended push up. Okay, so ideally we'll be looking to long the dollar from this level, okay, stops below where this liquidation took place to target 106. Okay, so obviously you can't trade the dollar index, but you can use it as a confluence to trade other assets. Okay, you guys should already know that, but that's the game plan for the dollar, because the higher time frame still very much looks valid. We need to come see that this 106 level taken out before we see any major or any decent retracements in price. Okay, especially if you look at the weekly candle closure. Right, this is a weekly candle closure. We had a big, after that, as I mentioned last week, after that big engulfing candle, we had a big push to the upside. Okay, this is the weekly candle closure, which means we're likely going to see a small retracement, just as I illustrated, before that next push up into 106. Okay, very simple, no need to overcomplicate it. All right, but that's the most probable scenario I see playing out this week. Right, now let's move over to EU. So if you go into EU now, okay, now you would have seen from last week, I was anticipating a push into 108. We didn't get that retracement as I would have liked on the DXY, so we didn't see that. What ended up rather happening is we saw price, actually let me illustrate on this chart. We saw price basically react from this level, this breaker, if that's what you want to call it, before we saw that impulsive bearish push to the downside. Okay, so now my targets still remain the same for the sells, which is 1006, which is going to be roughly the 106 target, and then if you see that extended push, I think we come down to 105. Okay, so my targets are still the same, which means again, as I'm anticipating a bullish push on the DXY, I'm expecting bearish continuation at least till my first target is reached. So my where I'll be looking for entries on EU, okay? Because I don't. If we're lucky, we may get a manipulation spike up before we see that continuation down. But this seems very unlikely. I'll be honest, just because of the retracement that we're not getting those deeper retracements, which means the trend is very strong. Okay, so the likely scenario that I see playing out on the euro dollar is something like this, right? So Friday's highs got obliterated. So Thursday's on Friday, I mean Thursday's highs got obliterated, and we came to mitigate this prominent level, which took out this previous high. Okay, we took out this region. So where I'll be looking for price to come back into is at least come into this candle level here. So let me illustrate a little bit on the 30-minute. So I'm anticipating price to at least come into this level here. Okay, where I'd be start looking for bearish scenarios to come into play. Okay, just because this was the zone that took out all that liquidity. Okay, so I'm anticipating again with that retracement on the DXY, I'm anticipating a push into this level. All right, where I'll be looking for some bearish confirmations and then short the fucker all the way back down to my potential low targets. Okay, let me illustrate on the 1 hour to my low targets. Okay, again intraday level, my first target would be these lows. Okay, let's leave it like this. That'll be my first target, and then my second target would obviously be this. My main target is 10635, okay, which is a nice 1 to 5 RR scenario, but this is the most high probable scenario I see playing out coming in to this new week. Okay, you could leave the level down here, but again I want to see the same sort of scenario play out. A retracement early on in the week, Monday, Tuesday, right, range bound environment, and then come into Tuesday or Wednesday expecting to see manipulation on the cards, and then that impulsive bearish push on EU on that and strength in the dollar in essence. Okay, so that is EU covered. Now let's move over to BTC. Okay, so BTC, let me go here. BTC, right? So wrong chart. Where is BTC? 1 second, guys. On the wrong chart, BTC. Right. So nothing's really happened on BTC per se, right? We've just been in range bound environment. Okay, we've seen nothing. I haven't really haven't traded this at all, but we've just been range bound. Okay, so we've taken liquefied the lows, we've liquefied the highs. Now this was the high that was taken where all this liquidity was left, right? This liquidity is now taken. Okay, so my scenario still remains the same, where I want to see coming into, again, Tuesday, Wednesday, we're likely going to see a lot of manipulation, even come into Thursday. But we're likely to see manipulation come into Tuesday before CPI, where I want to see a push up, a false push up. This is where I want to look to get into sells at 27K roughly, to then like a short-term price squeeze, right? Because there's a lot of shorts, right, piling up at these levels, okay? Because a lot of people are bearish right now. So I want to see a squeeze of all those liquidations, and then I want to see a fast push down to come and liquefy these lows, okay? My target, again, for swing, in terms of swing perspective, for BTC will still remains the same. I'm anticipating the lows of 21K to come and get hit where the CME gap is, all right? Very, very simple. Nothing's really changed, okay? Crypto is just slow, but I think now we're going to see volume this week. So hopefully we get that squeeze up into 27K, and then that meltdown where I'll look to get into my shorts. Validation will obviously be tight above 28K. Now, another confluence I have for this is another short we took this week with the team, which is on Solana. Okay, so I'm currently in some Solana shorts with the members. Again, if you guys are interested in premium analysis service where I share my analysis and my setups and my entries and triggers, etc., link will be in the description down below. But this was shared with the team on, I believe, Thursday. So we got in Thursday around this level. Price pushed up, deviated, came to mitigate this level, and then we had the impulsive push to the downside, which I was anticipating. Okay, we just happened to have it on Sunday, which is the end of the week volume. Okay, but basically we see the same sort of scenario here. If you look closely, you have the same sort of scenario, right? Price pushes up, right? Liquefies these highs, right? Price pushes up, liquefies these highs to the left, and then pushes down. Okay, and the price comes up to mitigate that high that took out that liquidity. Okay, here, before giving that impulsive push to the downside. Same sort of scenario I'm basically anticipating here. Okay, expecting price to come back to mitigate this level that took out these highs to the left, and then that's where I look for bearish scenarios to basically short the fucker all the way down. Okay, so it is a high probability setup, and hopefully we do see price set that up for this week. Okay, the Solana setup is currently running 180 pips. I'm anticipating $16. Right, hopefully if we see more volume this week, potentially even lower on Solana this week. So that setup is running very, very nicely. So that is BTC done and dusted. Now let's move over to gold. Now gold is a setup that played up very, very nicely this week. Let me illustrate it here. Right. So gold is a setup is right. So as I showed from, let's just go to the left quick before. I don't want to get into explain this week in a moment. But if you see here, right, just like I illustrated, right, the high got taken, the low got taken, and we're anticipating bearish push to the downside. Okay, as we entered, which again this entry was shared with the team. As soon as this low was taken, we entered our shorts, and as you can see, price played out very, very nicely. Stops just above the previous high. Okay, I think we took some profit at around the this low here, so around the 180 pip, 170, 180 pip region. Again, my target is still remains these lows, and then my extended target is all the way down here. Okay, which I'll be holding a partial for the swing. That's just how I like to hold my swings. But yeah, so that is, we're still in this position, right? We're still holding our swings from here. Now, on Friday, right, I did, we did get into some shorts from this level. Again, okay, price pushed down at around 61 pips. Move stops to break even as it was Friday. And then what ended up happening, got stop break even, and then price came up, liquefied this high before breaking structure to the downside. Now this is a very, very good type of manipulation. It worked out in our favor, but because of experience, I understand that Friday you see a lot of manipulative moves. That's why I moved my stops to break even early, as did the team. But this is a good scenario, because even if you miss this, right, even if you miss this scenario, I'm not going to explain exactly why this is a SMC trap exactly, because that's more in-depth analysis that I explain to or break down to mentorship students. Again, form will be for the in the description down below if you are interested in taking trading seriously as a career. But basically, this is a perfect scenario. Why? Because now we've seen this trap take place. This is one of my favorite traps that take place. Now again, with the same sort of scenario that I've just illustrated on DXY, the small retracement, as I've illustrated on EU, as I've illustrated even on BTC, I'm expecting the same sort of retracement. Okay, now this, because it's gold trades a little different, so we may see this retracement early on in the week. Right, depends. If we get a tight range on Monday, which is possible, okay, if we do see a tight range on Monday, this will increase the probability of this occurring. We're anticipating a squeeze into 1024, okay, where I'll be looking for bearish setup to short this fucker back down. Okay, again, my invalidation will be very simple, above the high that took out these highs where the trap took place, and then I would look to short this fucker down into my main target of 1885, okay, which gives us a nice 1 to 6, 1 to 7 R setup. But this is the scenario I see playing out, right? This is the most probable scenario I see playing out. Again, I like to keep stops, just give stops a little breather, but I guess invalidation is tight and it's above 1929, because if you squeeze above, then price is very likely to come up a lot higher and take out my swing shorts here as well at break even. But I don't, again, like I said, that's the less likely scenario, because we're building confluences along with the DXY, EU, etc. So this is the most high probable scenario I do see coming into play this week on the dollar. On gold. And this is sort of where I'd be looking to play it, right? Again, I want to see a tight range on Monday, squeeze on Tuesday, and then look to short the fucker down. And then CPI, I think we're going to see some manipulation, but in essence, the extended push to the downside to hit our targets of 1885, okay? I've been calling gold quite nicely for the past month or so, so quite in flow with this asset, but that's the game plan for gold coming in for the new week. Again, all setups are shared with members always. So with all that said and done, I hope you guys enjoy this video. Hope you've extracted some value from it. Again, if you are interested in anything, any of my services, link are in the description down below. But with all that said and done, please do like and subscribe, and I'll see you guys on the next one. Bye bye.